Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. Let's talk about cost of funds. When we look at overall cost of interest-bearing deposits in community banks across the nation, we've been seeing, of course, with interest rates, a slow downward move, getting down now to about 0.57%. So when we look at that and think about it, some people may remember me last year saying that I felt the community bank cost of funds should be closer to 0.2, especially where interest rates are at this particular point in time. Because if we look at where one-year T-bills are at 0.1%, is that essentially it would suggest that we need to see cost of funds coming down further in the industry based upon a risk-reward level. So it's still surprising that community bank cost of funds are still that high at 0.57%. But a really good trend that we've been seeing is the trend in cash-type deposits continue to grow. Now this may be due to the fact that banks are paying that kind of interest rate on money that's bringing in those cash-type deposits. But as we see ourselves moving close to 66%, is that this is a historical high in terms of cash-type deposits, the checking, the savings, the now accounts, money markets. So when we think about that, a lot of bankers think that if interest rates start to go up, that cash-type deposits will exit the banks and bring up their overall cost of money as interest rates rise. Well, I still think that, and I've talked about this before, that I feel that that trend in cash-type deposits might hold at community banks. And the reason for that is that you always look at the depositor being your best friend, community bankers, because they tend not to be able to time interest rates as they've done historically. So when we look at that, is that let's continue to see that trend going up, because overall when we look at the top 15th percentile community banks, is that you look at, they are more like closer to 75% in cash-type deposits. So we always look at it from a strategic planning standpoint at Seafried and Brew that community banks should plan on continuing to move cash-type deposits up to a level that is in that neighborhood of 75%. And at the same time, what that will do is to reduce interest rate risk if interest rates start to go up, and at the same time reduce liquidity risk. So when you look at that from the standpoint of being able to reduce risk with less cost, how good does that get? This is Jay Brew, co-chairman of Seafried and Brew. Have a great week.